The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is Esther Gulius, the tax lady, and this is our hour to talk taxes. And, we try to keep you the most informed in Western New York. So again, if you have any questions, 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930, and we're talking taxes. And today I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday.
Happy Saturday to you. And Christopher Fabian.
Hello, Esther.
Hey, Chris. And if you notice, they got the same last name. Hint, hint. Mm-hmm. They're married. Right?
Right.
All right. So usually the last few weeks we've had special guests on. Today we're going back to the drawing board because we really have 3 months until the end of this calendar year. And so we have 3 months to facilitate some changes if you're worried about your taxes. And again, you can join the conversation 803-0930, 803-0930, star 930 on a cell phone. But before we get into our conversation, we're going to talk about some of the things you need to do this last 3 months to take a look at your tax return and make sure that you get every dollar you're entitled to get. In the meantime, Chris or Tiff, we have school starting, right?
We do. School starts October 22nd. And so hurry up and register. It's a great opportunity. It meets twice a week, either in the mornings or evenings. Twice a week or online, completely virtual, and you learn taxes from A to Z. Halfway through the class, we pass out a Do You Want to Work letter, and the intent is we really would like you to work at one of our 32 offices. Great opportunity. Lots of fun.
And the classes they go from West Seneca to Williamsville to Niagara Falls to Tonawanda, and even, like Tiff said, online. So wherever you are, we have a class for you.
And we're very cognizant of the fact that we want to make sure that we are socially distanced, that we provide masks and, sanitizers, and we spray the room and clean everything.
And we do shower.
And make everyone take a shower, yeah. Right?
Right.
What kind of letters have we been getting?
We have been getting letters that ask you to prove college expense, dependency. Also letters, regretfully, if people passed away, they want death certificates and Form 56 if both the husband and wife passed away, if there's somebody else who's stepping in and assuming and managing the estate.
And, and the big thing is, too, people have to remember, with them being shut down from middle of March to the end of July, they are still very behind on processing mail. So if you wrote to them, you sent in an amended return, even possibly your payments haven't been cashed yet, they have trailers upon trailers of mail they have to go through. So you have to be patient. We can try to do phone calls to see if they still have it, but I can tell you 80% of the time, the person on the other end.
I got to tell you, this has been so frustrating for me. I've been doing offers and compromises, and 3 of them have been sent back because they invariably filed returns late. The people, they were a year or so behind, and so they sent in the returns 7 months ago, but the IRS still hasn't processed the return. The agent who's doing the offer and compromise says that they're behind in their filing and rejects the whole offer, and we have to start from scratch. So
right.
They're just really behind.
But what Tiff is referring to is if you're somebody that has that owes the IRS or state of New York money and you're unable to pay, we have the ability to offer the Internal Revenue Service and the state of New York a reduced settlement amount to clear up the debt so that you can move forward. And the thing is, if you're somebody that owes the IRS money or state of New York, if you need help with that, you can call EG Tax, and we'll be very happy to help you with an offer and compromise. Really, all you need to do is prove, and again, it has to be an ability not to pay. If you're just not paying because you don't want to pay and you have the money to pay, they're not going to work with you. But if you're truly, especially in light of COVID, where people have lost their jobs, EG Tax can really help you out of a big mess, because they want you to move forward so that you'll keep making money and you'll get back in the system and everything will be good. So you can call us at 632-7886.
Yeah, and like I said, a lot of the people who do offers and compromise are people who haven't filed for multiple years, because the reason they haven't filed is they regrettably knew the answer, and so they were burying their head in the sand and not doing it. And there are alternatives.
Right. And so if you're somebody that hasn't filed multiple years because you owe money, we have a way for you to, and probably IRS is sending you love letters anyway. We have a way to get you out of debt using this offer and compromise system that the IRS has. Okay, let's talk again. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, so we have 3 months till the end of the year. And a lot of people that are doing estimated payments that have been making their payments really should take a look here at how their income is in relationship to the payments that they're making. Maybe you're making too little of estimates or making too big of estimates. For instance, at the beginning of the year, the realtors were having a really hard time because they couldn't show houses. And then all of a sudden, once they lifted that mandate where they could start to show houses again, if they were masked up, everything went ballistic. So they were making all kinds of money. But the thing is, if you're a self-employed realtor, you want to make sure that the money that you're paying in, you have to pay in. Right?
Right. You got to do your plan. You don't want to give them too much, because heaven forbid if something happens again next year and the government shut down, they're going to hold on to your money.
Right. And the other thing is, maybe you were on layoff and you had unemployment, and the state of New York, with the state of New York unemployment and the federal unemployment pandemic money that they were giving, you might have been getting $1,000, $1,100 a week, and they weren't taking any money out of your payments. You can call EG Tax and we'll help you so that you can get straightened up before the end of the year.
And there's some a lot of my clients are doing DoorDash, or they're doing Uber or Lyft. And that's another situation that you really want to make sure that you stay on top of, and that you're not cutting yourself short when it comes to tax filing.
Especially if you're doing something like that, because not only do you have income tax if you're self-employed, but you have FICA, you have to pay your own self-employment taxes, which is an additional 15.3%. So you really want to find out what your liability is so that you can get it straightened out before 12/31.
Right.
All right, we have a text that came in, Tiff.
We do. It says, I got a letter from the IRS asking me to prove my identity, and there is a phone number on the letter, but I can't get through. I keep calling and calling. Any suggestions? I'm pulling my hair out. I would really like my refund.
We see the bald guy walking around. That's the guy that's got the letter from the IRS. What do you suggest, Tiff?
Well, so this is somebody, the IRS has been doing this more and more, and they want to prove your identity, and they want you to answer some questions. And I've actually had a few clients who've been in this situation. And so what we have to do, and they can't get a hold of the number on the letter, there's also a website, but they go to the website, and the website says, okay, you did this and you did this, now call the number. So what we do is we call the practitioner priority line, and then the priority line transfers you over to the identity line, and then we can get through. It's sort of a backdoor approach.
Right? So you're saying you can help.
Yep, just call 632-7886.
And again, we do not charge to help you with this situation. So if you're somebody and the IRS says, how do we really know it's you? And you can't get a hold of anybody at the IRS, you can call us at EG Tax. Ask for Tiffany Fabian, and she's and you can actually be home, and she can do a 3-way call, right?
Yep,
Tiff?
that's right.
Okay. We're going to take a short break. We're going to be back on the other side with your calls, 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We'll see you on the other side. The tax lady from EG Tax, and this is our tax show, Ask the Tax Lady. And if you have any questions, you can join us by calling in to 8030930, 8030930, star 930 on a cell phone. Our text line is 716-8030930. I wanted to mention, there was all the hubbub this week about the president not paying taxes. And it's interesting. I did some research because for another radio show called and asked me and said, it kind of bothers me to think that Trump didn't pay taxes. So I did some research and I found out that in 1994 he'd lost $1 trillion. That's a lot of money. So the way that our federal government is set up, they reward you when you're somebody that has gone out and taken the initiative to hire people, renovate buildings, da-da-da-da-da-da. And so if when in the process of doing that, you have a loss, they allow you to carry that loss back 3 years and carry it forward. It used to be 15 years, wasn't it?
20.
Yeah. So that $1 trillion that he lost, he really lost it. In other words, that was money that came out of
his
whatever
pocket.
Investments that he had. So he may not, and again, I don't know, I haven't seen his tax return. I certainly didn't do his tax return. But I'm assuming that he had a net operating loss carryback, and then after he used up all that money, he started carrying it forward. Then again in 2003, his casino lost $100 million. So when you take a look at that, that's how it, even though you had taxable income in those base period years, when you apply the loss that's being carried back or carried forward, it can be utilized to not pay any taxes. And like I said the other day, if anybody listening wants to not pay taxes, all you have to do is things like what Donald Trump does. Why don't you buy that plaza that's $100 million? You sign on the bottom line. You hire the people. You pay the taxes. You do the rehab. You put in the insurance. And hopefully no COVID happens, so everybody keeps paying you rent. But if they don't, oh, well, you operate at a loss. And so it's not as simple as just saying he didn't pay any taxes. He was an investor, and you, as an investor, you have good times and you have bad times. And he's the kind of person that looks at the glass half full, whereas many of us would lose our sleep at night and we wouldn't think it was very good.
And
so
he said
I just thought I'd explain that.
Yeah, and he said during the debate that he paid millions and millions in taxes.
I'm sure he did.
Right. And, and the thing is, what I tell people, when they bring it up to me is, well, he's a businessman, right? Yep, they'll say. I said, do you think he's a smart businessman? Oh, yeah, he's very smart, very smart. So I said, okay, as a smart businessman, do you think he would rather have $1 billion in his left hand or $400 million in his right hand? And they look at me and I go, well, he would rather have the billion. I said, exactly. He lost $1 billion. He didn't want to lose $1 billion to save $400 million.
That's true. That's true.
And then they go,
That's why I wanted to talk today about how a tax bracket affects what you pay in taxes. A lot of people don't realize that what a tax bracket is and just exactly how that happens. But I thought it was worth, especially with our president now in hospital fighting COVID, and we all do lift up for Donald Trump our prayers, I will tell you, and hope that he gets back on his feet as soon as possible. But I thought it was important for people to realize that when the media prints something, there is a backstory, and usually when you hear the backstory, oh, okay. Right? All right. I'm Esther Gilius, the tax lady, 8030930, 8030930, star 930 on a cell phone, and we have a text, Tiff. Right?
Yep. It says, is that extra unemployment that I received taxable, because I'm getting conflicting answers and I'm trying to settle
The
it.
stimulus is tax-free. which was that money that we got for the people living in our households and
The
our dependents.
$1,200.
But the unemployment is taxable. Okay,
Very
so
much.
Federal and the
unemployment's
state.
taxable. Stimulus is tax-free. Okay.
Yep, and you got to look at it. How is that going to impact your tax return?
Right, and that's why I said, you really got to look. You really have to look at what you got in income here because it came in bits and pieces. You might have been scrambling for a while, doing a little self-employment, getting unemployment, and now just before the end of the year, you really haven't. You're kind of trying to catch up. Take a look and give us a call. We'll be very happy to go over everything. Maybe you've sold property and you're wondering how that affects your tax liability. Give EG Tax a call. There's no charge for us to talk to you. 803-0930, 803-0930, star 930 on a cell phone. You can give us a call in studio or you can call us at corporate headquarters. Okay, we have phone calls. I think we have James.
Yep.
Hey, James, how can we help you, sir?
My question is about the government lifting the mandated withdrawals from the IRA.
Yeah, uh-huh.
I'd like to know what's involved in that on my end.
Well, are you over the age of 72?
Yes, I am.
Then you don't have to do a required minimum distribution this year.
So I do nothing. There's no paperwork, nothing involved.
Nothing.
You have to. Your financial institution should send you a letter asking you to sign off on it.
Now, just because you don't have to doesn't mean you shouldn't necessarily.
Right, and Tiffany brings up a good point. Many people that have RMDs, they don't have to take it out this year, but if their income is low enough that they'd be able to take out their RMD without paying taxes, then you'd want to because then it would come out tax-free.
And another one of my clients is taking the RMD for his mom and dad because when regrettably he passes away, that's less money that the heirs will have to pay taxes on. So
Right, so in your situation, Jim, do you have other forms of income?
I do, and every year I have to pay a lot of money, and I lose a lot of my...
All right, well, this year you're going to be happy. You can dance around the tax ball on April the 15th.
They should be notifying me because I've already got it set up where they take it every year,
Yeah, well, make sure you talk to them so they don't take it out. I'm sure that I would think that your investment advisor would give you something in writing to make sure that you don't do that withdrawal because you don't have to.
Oh, thank you, Esther.
You're welcome. Thank you for calling. Okay, and we got Mark. Hey, Mark, how can we help you, sir?
Hey, how are you today?
I'm good.
Good. I have a question regarding New York State's Essential Plan, which is a health plan
Insurance.
for low-income individuals.
Yes, sir.
And it has to do with taxable income. With the additional monies provided by the federal and state governments giving people additional money over unemployment, are those extra monies given, like the $600 and the $300 and the $1,200 given, held against the individual when it comes time to figure out if they went over or under the $24,000?
Okay.
Well, all of that money gets added to your modified adjusted gross income, except for the tax-free money from the stimulus. So your unemployment is going to be part of the computation to find out how much your modified adjusted gross income is. But we have, and last week we had Tim on the show. He's our president of EG Health Connect. You can call Tim at 632-7886, and he will go. He's so patient. He'll go line by line by line and let you know how you work out with the essential plan.
And I can tell you, with talking to Tim, that for people on Medicaid or the Essential Plan through the New York State of Health, that is not going to impact it because once you're locked into that, you're locked in for the year. And the next year, it's based upon projected income again. So Essential Plan and Medicaid, you're fine. If you get a subsidy, meaning the IRS is giving you $400 a month to pay for your $800 a month health insurance, that's where the unemployment is going to come into play and you can be in jeopardy.
So that $600 that we got this year, that's not going to hurt us?
Not for the health insurance.
Not if you're locked in.
Not if you're locked in under the Medicaid or the essential.
If they were applying for the first time, then it would be in the computation, right, Chris?
Yeah, it's all based. It's so bizarre. It's based upon the projected income. So you gotta, going
So
forward,
what I'd
it could
suggest,
impact it.
But give Tim a call at 632-7886. He'll go over everything with you. But if you had it already, you'll be good to go. Then next year, it'll be based upon next year's projected income. So this year, you just would have been...
Yeah, because for instance, I have one of my clients who called the other day and yesterday, and she lost her job. And she was making about $40,000 a year. Her husband was making $40,000 a year, but she just lost her job, and her husband decided to go to self-employment. And so I called Tim, did a conference call, and it's a projection. So he thinks they would qualify for Essential this year. So
Right, and that would be a new plan. But it sounds like this guy's on it
it was
already,
already
so
on
you
it.
won't have
Yep.
to worry about it.
Right.
Okay?
Correct.
But again, if you want confirmation, call Tim Eliason at our corporate headquarters. Ask for him, and he'll walk you through it. Okay?
Yep. He's
All right. Good. He's gone already.
Yes.
All right. We have another text.
Yep. Hi, everyone. I understand that we can withdraw up to $100K penalty free if we can prove a financial hardship due to COVID. Can you withdraw more than your actual loss of income? So he's wondering about the financial inflict from COVID. Would you get in trouble with the IRS if you got audited?
No, I mean, this year the penalty for taking money out of your pension plan up to $100,000 is waived if you're under the age of 59 and a half.
Right, if you're impacted
But
by
you're
COVID.
still going to pay taxes on the money.
Not unless you pay it back within the 2 years.
Right, but if you don't pay it back within that period of time, then it's going to be taxable to you. So
right, but if you don't pay, if you pay it back over 2 years, then you don't have to pay tax
but
and no
many
penalty.
people taking the money out are not going to pay it back. So you won't be subject to penalty, and if you pay it back, it won't be taxable. But if you don't pay it back, you're going to pay taxes on it, but you won't pay the penalty.
So his question is: so you have to be, in order to take up to $100,000, you have to be impacted by COVID. So his question is: what if he's impacted $15,000 financially, and he takes out $30,000? Will he be okay?
it'll be fine.
Yeah, it's very loose.
Because the whole thing was meant to be a safety net for people that, especially remember back to March and April and May, when everybody was losing their jobs and people didn't have income. This was their safety net the IRS was throwing at you, the federal government was throwing at you, to help you get through. So, and it's still in effect, even though things are loosening up now, people are going back to work, and things are much better now, thank God. But that still is in the plan through December 31st. So, yeah, you could take it out.
More than. Yep,
Okay,
good
and
question.
Let's talk to Rod. Hey, Rod, how can we help you quickly, sir?
Yes, I have a question about Social Security.
Yeah.
I recently turned 66, so I am drawing for the last couple months, and I'm working a full-time job, and I'm wondering what taxes I'm looking at the end of the year.
Okay, so are you married or single?
I'm single, divorced.
All right, so when you take half of your Social Security and add it to your other forms of income, if that answer is subtracted from $25,000 is subtracted from that answer, the excess over $25,000 is half taxable, and so part of your Social Security, obviously, it sounds like if you have a full-time job, is going to be partially taxable up to 85%. Have you been withholding on your Social Security?
No.
So something that many of my clients do is you can do a voluntary withdrawal every month in federal taxes. It's tax-free in the state of New York, by the way. And you can call Social Security Administration and they'll take out the amount. But what I'd suggest you do is call our office. We'll run through the numbers and tell you exactly what you're looking at so that you aren't surprised on April 15th.
Okay.
Okay. All right, I'm Esther Golias, the tax lady. We're going to take a short break for the news. We'll be back on the other side with your questions. Hey, that's our motto, we are family, and to us, you're family. I'm Esther Goulias, the head mama, with my daughter, Tiffany Fabian, and Christopher Fabian, my son-in-law, and we're here from EG Tax, and we're answering your tax questions. 8030930, 8030930, star 930 on the cell phone, and you can text it to 716-8030930. This time of year, we've got 3 months left. It's time to make those moves. The year, because of all the weird stuff. Have you ever seen a year like this?
What weird stuff?
Oh my gosh. I mean, with all the weird, it's like, I can't even believe it's the 3rd of October. Where did springtime go,
It's strange.
Anyway, a lot of people don't understand how they get taxed. A lot of times people will call and say, what tax bracket am I in? And so I thought it was important for people to realize that the tax brackets range from 10% up to 37% on the federal. And if you were in the 10% tax bracket and you had $100,000, which doesn't make sense in the 10% bracket, but you would only pay $37,000 in taxes on that money. You would only pay $10,000 on that money. But if you're in the 37% tax bracket on $100,000, you'd pay $37,000 in taxes. So depending upon how your tax bracket works depends upon how much you'll pay taxes. In the same token, that's how itemized deductions work. Based upon your tax bracket, that's the benefit you receive. So if you're in the 10% tax bracket and you have deductions, then you only get 10% of those deductions to save you money. If you're in the 37% tax bracket and you have itemized deductions, then 37% of those itemized deductions save you money. So there can be a 27% spread based upon the income you receive. Right?
Right.
Yeah, it's so confusing. I get so many clients who call and are like, if I take out that $10,000, is that going to bump me up into another tax bracket?
Right.
And then I'm in trouble. I'm
right.
like,
and that's
no.
the other thing. Each bracket, as your income moves up, you move into the next bracket, but you only pay taxes at that first level at the lower amount. So if you're in the 10% bracket, you pay 10% on that first level. Then you go up to the next level. Then you pay 12%, and so on and so forth. On that particular level, it's almost like looking at a parfait. Each level of your parfait is how you pay in taxes until you get to the very top. And on that top bracket, you would pay 37% forever.
Right.
Right?
Right.
So if you were extremely wealthy.
Wow.
Right?
Oh, so
Anyway.
I didn't know that. So everything is, I knew about the graduated. Once you get to 37, everything is bumped into that world?
Just the amount.
No,
Okay,
no.
just the amount.
Then all income
Okay,
after you
okay,
hit that 37%.
Gotcha.
Yeah, okay. So each level is
I better
taxed
not give anybody any ideas in Congress.
I'm telling you. All right, let's go back to the phones. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We have Debbie. Hey, Deb.
Hi,
How are you?
I'm good. How are you?
Good. What can we help you with?
My question was, my husband has since retired, and he has his own business as a handyman.
Okay.
And last year we profited about $28,000 with his business.
Okay.
My question is, we make another $30,000 with our Social Security.
Mm-hmm.
So, what are my best options to contribute towards our retirement fund?
Okay, that's really interesting because I was just going to talk about that. So you can put money into a solo 401k plan, and so he could actually, if he set up his 401k plan, solar form, he has no employees, right, Debbie?
No, he's just no.
So he could put the whole thing into a solo a 401k plan. Or he could do an SEP, Simplified Employee Pension, or he could do an IRA for himself and you as a spouse. You're a non-working spouse?
Yes, I'm retired.
So he could do an IRA for him and an IRA for you, so that would be $14,000. But if he really wants to not pay any taxes, he could set up a solo 401k plan, so he could put like $40,000 away.
Yeah.
And that's no taxes on that one.
Then he'd only have to pay FICA on his net profit. And actually, under the changes this year, he can actually get rid of half of his FICA, because that was one of the stipulations in some of the tax law changes due to the coronavirus.
Does he pay with his own health insurance?
Okay.
Yeah, and his health insurance is he paying his own health insurance, or is it all just Medicare?
No, he has Medicare plus a supplement.
All right, and so that's also deductible. So if he does the right things, did he take that as an expense last year? Do you know when you guys did your return?
I believe he did. I'd have to.
Yeah, because that's an adjustment to income. So even his Medicare is an adjustment as a self-employed person. So, and he actually could have still put money into an SEP up till extension deadline, which was just a couple weeks ago. So maybe he wants to give us a call. We'll help him so that he can kind of tax plan, because being self-employed, you know how you think $28,000, that shouldn't cost us much. But when you factor in the FICA and the taxes, it ends up being a pretty little penny.
Right, that makes sense. Okay, well, we'll contact you guys. And
all right, thanks, Deb. All right, and so I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on a cell phone. Wanted to go back to some of the things that are especially important for business owners, and it's interesting that Deb would call and ask about that, because one of the things that business owners need to look at is not only their pension plan, which they can really, they're in charge of it, right? As long as they put money aside and they are good investors, they can set money into an SEP, into a 401k, into an IRA. There's all kinds of things that they can do. But there's also things that are deductible, such as an office and home, right?
Right. And that's, we're getting actually a lot of calls on that right now.
Popular topic.
Yep.
Because everybody's working at home.
Yep.
So is your office and home deductible on the federal return?
For self-employed, yes. Employee, no.
But on the state of New York?
They both are.
Right. So if you're an employee and you're working in your home office, then on the federal return, you cannot take it as an expense. If you were self-employed, like Debbie's husband is self-employed, maybe he stores things in the garage and he's got an office where he does billing, and that's a room that he uses exclusively for the production of income, then he'd have a deductible office and home expense because he's self-employed. The state of New York has a different way of looking at it. They say even though you're an employee, even though you're not allowed to take it on your federal return, we're going to allow you to take an office and home deduction on New York State. So you end up doing an office and home if you're self-employed on the federal and on the state, if you're an employee not on the federal, but definitely on New York State.
Right. And it's all based upon the percentage of the office to your house.
Yeah. So, and it has to be a room. I might have already said this. I'm going to reiterate that you use solely and exclusively as an office. It can't double as a bedroom. It has to have 4 walls and a door, and really important. And also, if you're self-employed, like that former caller, you could potentially take an office and home too. And
right. So for Debbie,
yes,
maybe her husband missed the deduction for his Medicare that he might have been paying through his Social Security, and he didn't know he could take that. He can amend his return, and if he didn't take an office and home deduction, if he has a home office, he can also do that. And that's something we do all the time. We amend tax returns all the time.
Yeah, and the neat thing too about a self-employed person, if you have an office and home, you can then take your miles from your office to your first stop, whereas you usually can't do that as a regular W-2 person.
Right. So if you're self-employed and you're working out of your home, that is a deduction on your Schedule C, and it's a deduction on the state of New York. If you are an employee, you cannot take an office and home, even though you're working in one, on the federal, but on the state return, they say yes.
That's right.
All right, and other things that people should be aware of is employee business expenses. Again, the self-employed person is able to take their employee business expenses as a deduction, such as mileage, like Tiffany was saying. Mileage is deductible if you're self-employed. As an employee, is it deductible?
No.
No, only on the state, right?
Correct.
So on New York State, if you're driving around as an outside salesman and you're on a W-2, on the federal, you can't deduct it. On New York State, you can. And if you're somebody that hasn't been deducting it, then you should amend your New York State return.
Definitely.
And put it on, right?
Yep.
All right, I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. Okay, and the other thing that's important for people to know is alimony. If you have a 2019 divorce going forward and you're paying alimony, alimony is no longer taxable if you are the recipient of alimony from a 2019 going forward divorce. However, on the state of New York, it is taxable on New York State, and it would be deductible to the payer.
Right. So old laws and new laws and trying to figure them out. So,
and something important is that person who's receiving alimony is earned income credit is certainly something on the table with the new law, because she should get a job if she doesn't have a job and she has children, so she could qualify for earned income credit. It's a really huge credit.
Our phone number again, 8030930, 8030930. We have a text, and we're going to take a short break, and we'll be back on the other side with your calls and your texts. Hey, I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Give us a jingle if you have any calls, any questions. Maybe you're getting nasty grams, have any questions. You can get us anytime on our website at egtax.com. Ask me a question. I respond almost immediately. Wanted to go back, though, before I answer these. We have a couple texts coming in. The difference between itemized deductions and a credit, an itemized deduction is multiplied by your tax bracket. Credits, not true. Credits, you get the full credit as a reduction of your tax liability. So things like the adoption credit, which this year is going to be like $14,050, they actually reduce your tax liability by that amount. The American Opportunity Tax Credit, which is for children, you could be yourself too, for the first 4 years of continuing education, up to $2,500. It has a refundable feature for part of it. Child and dependent care credit to pay for your kids or your dependent that is unable, and you would be unable to work unless they were in a facility. That's a credit. The child tax credit, the earned income credit, where if you have children or people that are would qualify as your child, and you're working and your wages are relatively on the lighter side, they give you credits up to like $7,000 for up to 3 children. Lifetime learning credits, that's for if you're past the 4 years of continuing education, that's a 20% credit. Residential energy credits, pension savers credit for putting money away in a pension plan, foreign tax credits, those are things where they give you dollar for dollar write-offs. And so if you can get a credit, that's a good thing. Okay?
Yep.
All right, we got lots of texts coming in.
We do.
What do we got, Tiff?
The first text says, I'm looking for a new job out of state. Can I deduct the job expenses while I'm looking for a job out of the state?
Well, no, I hate to tell people
yes.
bad news. You tell them.
So on the federal, the answer is no. And
on the state, it's no, because they're looking for a job outside of New York State.
Yep,
right?
Yep. Wow.
So it's a no.
No. That's
okay.
sad.
Next one here.
So Chris, read this text about the beneficiaries. There's a son.
My brother passed away, was divorced, never updated his beneficiaries. What happens to his retirement account?
And it says also that he has $250,000 in there.
Well, I mean, if you should take it up with the attorney, but if the beneficiary is still his ex-wife, I would assume that she's going to get it. That's really an important thing. None of us really like doing details. There are some of us, I guess, that like doing details, but you really need to take a look annually at your beneficiaries, and as your life situation changes, those little things, I'm sure that Mr. Barnes did not plan on crashing his plane yesterday, right?
Right.
And he's an attorney, so I'm assuming that he had his affairs in order. But that's a really important thing, to keep your affairs in order. And if you really don't want an ex-spouse to get your assets, and it wasn't updated when you got your divorce, you want to make sure that you do that. Take a look at that stuff. On our website, we have a what would you
planning,
call it, you
a
guys?
plan.
It's kind of if you're reading this, I'm not with you anymore form, right? With all kinds of stuff for you to fill out, so that your loved ones, in the event that something happens and you didn't have a chance to really get all your ducks in a row, it tells them what you want to do with everything.
Right. And I know, going back to the text, if the ex-wife did get off because of the divorce, the money would go to the estate. And so then you're looking at that 37% tax right away, plus New York State tax. So where if he would have updated it to his children or even his sister, she could have, at least with the new laws, taken it over 10 years and spread out that tax and maybe not have paid 37%. Probably not paid 37%.
Yeah, but and that's the whole thing about getting ready. And that was the whole point of the show this week, was getting ready. We have all kinds of things to get ready for. We're getting ready for the end of the year. You want to make sure that you have your estate in order. And maybe you think to yourself, I just have a simple estate. But let's say you have $100,000 in an IRA. You want to make sure you put your beneficiaries on there, because you want to make sure that it goes without taxes, if at all possible, to your heirs, who would then pay the taxes rather than going through the estate.
Right. And it's the letter of instructions.
Right. Oh, letter of instruction on our website,
yes.
Right? And you go to egtax.com. Okay, what else we got here?
It says, how much do you have to make to be considered self-employed and have a qualifying office and home? Thanks, Alan.
Okay, so the office and home, when you're self-employed, is limited by your net profit. So if you have a $10,000 net profit and your qualified expenses come out to be $5,000 on your office and home, that will reduce your net profit from $10,000 down to $5,000. But if you have an $8,000 loss on your office and home, and your expenses are $8,000 loss on your business, and you have $5,000 office and home, then you're unable to take it. It's suspended and carried forward.
Correct.
That's right.
Thank you, Chris.
Anytime.
All right, thank you. What else we got here?
We got, what about SBA loans? Is the income taxable?
All right, so those SBA loans that we got, whenever you borrow money, it's tax-free.
Yep.
Right? Tax-free. Now, the SBA loan that you might have gotten, the PPP money, you can get that forgiven, so that turns into a grant. So if that SBA money, if you did what you're supposed to do, pay 40% in wages and 60% in operating expenses, and you submit that to the SBA, then they will forgive it, and that is a forgiven grant, and it won't be taxable. But then that means the expenses that you paid with that grant money are no longer deductible either. They were talking about making that not true, but right now, as far as I can see, that's what's going to happen. But if you borrowed the money from the SBA, borrowed money is not taxable. And if you use that to pay your operating expenses, those would be deductible, because you're going to be paying it back.
Right.
Okay?
Right. Yep.
And what else we got?
There's a caller and a text. Which do you want?
Yeah, let's do the caller first.
Hey, Nick, how can we help you?
Yes, hi. Thank you all for what you do. You guys do a great service to the community. So we
thank you so much, Nick.
Everybody. So we have a very quick question for you. I'm a sole proprietor. I small business. I'm the owner, and I do everything.
I know. I walk around the office with a toilet bowl brush, because part of my job is to clean the toilets.
Thanks for divulging that to the audience. So the quick question I have for you is, I'm getting some money from old invoices from 2 different companies from last year.
Okay.
Eligible for unemployment? That's my question.
Eligible for unemployment, did you say?
Oh, you mean the pandemic unemployment?
I'm sorry, correct. That is correct.
But aren't you, all right, so what you're saying is right now your business is not operating because of COVID?
Right. Well, I'm on a very limited basis, but I'm not getting paid this year. They decided that they're going to pay me for what they owe me last year, so I'm getting increments of money from last year.
So the question is, are you getting, is your business still operating?
Yeah.
And the only reason you aren't getting any income is because of the COVID
Correct.
crisis?
But they're giving me money from last.
Yeah, I got it. I know what you're saying, but the thing is, in order to qualify for unemployment, you have to be able to say that you're still available for work and trying to have work. And the only reason that the pandemic unemployment would qualify is because due to COVID, you lost the income. So, Chris, would you say that he would qualify? Would he not?
I would say yes. It could be touchy if New York State does decide to come in and look at it. But I would say because you're not you worked it last year and they just paid you a year later.
Year.
So it's
but it's still a gainful, it's still a business, right? And the only reason you're not operating is of COVID.
Correct.
Right?
Correct. Yeah.
And if that's the case, then you should qualify for pandemic.
Right.
All of this is I have documentation from last year. So.
But that doesn't mean that you're not going to have problems. And that doesn't mean that they may say, oh, well, we don't like Nick and we don't want him to get it. But it sounds to me like you would qualify. So, have you gone ahead and applied for unemployment?
Yes, that's why. And I was told by somebody that it's okay because it is last year's income. But then how do we do that on the taxes for next year? I mean,
well, it's when you receive it is going to be taxable.
You guys too long, but
I mean, when you receive it, it's taxable. So
I'm sorry. Go ahead.
When you
receive the income, it's taxable. So you're going to put it on your 2020 tax return.
That's correct. Yeah. I know.
And then you're going to reduce it by your expenses. So if you still were paying expenses, it may wipe out the income as well. You know.
Oh, I see what you're saying. Okay.
Okay.
Yeah, it's a little tricky. So.
All right. Well, if you need help, give us a jingle. Okay.
I will do that. Thank you.
Thank you, sir. Okay. What else we got? We got anything quick?
Yep. I have a relative in a nursing home need information on getting the refund for the bed tax. Well, that's done on
a good one.
IT
New York 258.
258. That's right. And so it's 8%, 6%, excuse me. And so it's 6% of what the charges are. And
so if they're
it's all
charging
money
your
in
loved
hand.
one $100,000, you have a $6,000 refund coming back through New York State when you file the New York 258.
Save your canceled checks and your billing statements.
Right. So it's strictly the amount of the housing portion of the nursing home. So if there's medical expenses attached to that, that's not deductible. It's strictly the cost of the rental, so to speak, of the nursing home.
Yeah, and if you didn't do it for the 19, 18, or 17 return, we can also amend
get your money
those.
back. Right.
Yeah.
And again, it has to be a private pay patient. So if it's Medicaid that's paying for it, it wouldn't qualify.
And it has to be complete nursing home care. Can't be
Right.
assisted living.
Right.
The next question is, my government TSP advises me not to designate beneficiaries and lays out the order it gets paid on, spouse, children, etc.
Okay, well, I don't. Chris, are you familiar with that?
Well, that's the tax. That's just your regular savings
Because
plan.
it's just your savings plan of your wages, right?
Yep.
Yeah. So that's why.
Yeah, they already have it predetermined.
So it's
who
not
gets it,
like
so.
a pension plan or an annuity. This is a tax-sheltered savings plan of your wages. So it is your wages. So if they have it all ironed out, that's all you'd have to worry about.
Yeah,
Right.
Good question.
All right. Again, if you need the best tax help or just questions, you're getting love letters from the IRS, you're interested in our tax school, you can go to our website at egtax.com. If you ever are sitting around and you in the middle of the afternoon and you're having a fight with your wife or your spouse about a tax thing and say, we'll just call EG-Tax, you can always go and ask the tax lady. We're happy to help you. Love letters, we're happy to help you with that too. If you're interested in tax school, or if if you're somebody that's interested in getting health insurance, Tim Eliason from EG Health Connect will help you as well. Until next week, I'm Esther Gulias with Tiffany Fabian, Christopher Fabian. Thanks for listening. Have a great week. God bless.